Welcome to another episode of the Global Investors Podcast. I'm your host, Charles Carillo. Today we have Jim Sheils. He has done over 2,000 rehabs throughout his real estate investing career, previously focusing on bulk foreclosures. Today, Jim specializes in building rental portfolios for individual investors and institutional buyers in Florida's high-growth markets by focusing on the build-to-rent niche, which provides new construction in low-density projects, properties such as single-family homes, duplexes, and quads, with property management already in place. So thank you so much for coming on
Charles,
today,
thanks for having me. Good to be here.
Yeah, it's great to have you on here. I love, obviously, you have a great experience background with all the different rehabs, which we love to get into, but also the build to rent niche is something that we haven't really touched too much on the show. But before we get into all of that, can you give us a little background on yourself, both personally and professionally, prior to getting involved with real estate investing?
Yeah, I grew up in the Northeast in a very lower middle class family, always wanted to be an entrepreneur. And I got into real estate about 25 years ago. I liked the tangibility when I was testing all these different businesses and business ideas, kept coming back to real estate. And I saw that stat that 7 out of 10 millionaires made their money in real estate. And now I think if you look that up, it's up to 8 out of 10. And so I liked that tangibility, and I bought my first property, a fixer-upper, 25 years ago, which is crazy to hear. And I've gone on to evolve it into different businesses. Today, I really appreciate real estate, what it's done for me, for my investors. It's bought back my time. And one of my goals, Charles, is to have a legendary family life. And, with my wife and 5 children, that was important to me. I didn't have financial means growing up as a kid, and I wanted to be able to do things that we enjoyed, of impact, and real estate's allowed me to do that.
Yeah, I would love to get in later on. We can touch base on that because I'd love to get in more information on what you and your wife have done over the years and a book you wrote about that. But I think one of the first stats that jumped out to me when I was reading about you was the over 2,000 properties you've rehabbed. Can you explain a little bit about how you're able to do that? I mean, how did you source the properties and kind of how your company was structured? Because I mean, it's a completely different beast when you're getting into that many properties.
Yeah, bulk rehabs is not for the faint-hearted. But I want to tell you this, Charles. This is really important. Of all those rehabs, I did 2 of them myself. 2. And I was so terrible at them personally that my contractor friend who helped us on the first one was just like, "Oh man, dude, you are not good at this." And so I give that reason for you listening out there, says, "Well, I'm not, the best mechanically or fixer upper." I'm not, but I understood the process. I understood the numbers. I understood how to oversee it. And I think that actually was to my advantage, because sometimes we get too wrapped up in the details. People say to me, "Oh, well, I'm very good at fixing things." And that can be great. But sometimes if you're just too much in, then you can't step back and you can't scale. And I was able to understand the process and bring in good people. And also my main thing was finding the deals, right? You always got to be able to find the deal, finance the deal, and manage the deal, whether it's fixing it up and selling it, fixing it up and renting it. And those are the 3 pieces. And finding the deal, Charles, that's where I excelled. And I've just been always old fashioned, using relationships. I'd build relationships, whether I was in California at the beginning of my career, down to Florida, with some of the best REO agents in the area. That means agents that work for bank foreclosures. So these agents would get a bulk of properties at good pricing that needed work. I knew how to work with them. I knew how to please them. They like people who were easy to work with, could close fast. I always paid both sides of the commission to them. I never tried to take a commission. That was a choice I always made. And I did volume. And so I would build these relationships, and that's how we were able to scale. And with some wholesalers as well that offered, really fair deals, and they had their own relationships. So I believe in the golden goose concept, right? A golden goose will lay you many eggs. Instead of just trying to find one egg, try to find the golden goose. And that's how I built the foreclosure renovation business, really, with the finding the golden geese.
How did you go about, obviously you had the sourcing down. How did you go about the other parts of it? Did you have a partner that you worked with, or were you also putting them?
I had a partner for years that worked with it and oversaw the rehabs. Working in rehabs, that is one of the tougher parts about being in the rehab business opposed to building new construction. Building new construction, you get to a higher scale where you can work with higher, more developed subcontractors and building companies to support you. When you're working normally in the rehab, you're either running your own crew or hiring smaller crews. And that can be nice and it can be great people to be with, but it can also be all over the board. So you got to make sure every project's going on time, in budget, and quality work. And those three things, once I got clear on those, man, I wish I knew that, 25, even 20 years ago. Holding to those three things is not always easy. Emotions get in the way. But when you can separate emotions and personality, saying, hey, our relationship is on time, in budget, quality work, and I'll always pay you and pay you on time, you got to hold to those three things. So there was a partner I had that was managing that, or sometimes a construction manager. And that's an important part. Because if you're not getting the right, but that's where I encourage people to go deep into one market if you're rehabbing, right? We had our go-to AC guy, our go-to roofer, our go-to plumber. And once you get those and you're doing volume, again, volume has its privilege. If you're trying to rehab in 7 different markets starting out, man, you're gonna die on the vine quick, or at least the odds are. So that's how we kind of built that side of the business. But make no mistake, doing a bulk of those, it can be very demanding.
Yeah, it's very similar with like small rental properties. I started off with buying small multifamilies and stuff, and we bought them like strategically close to each other. And like you said, it's like one HVAC guy, one this, one that, and it was your go-to. The more units you did, the better your relationship was, right? And in pricing, got a little bit more
Absolutely.
competitive. You know what I mean?
Volume has privilege. Volume
So
has privilege.
yeah, for sure, for sure. So in 2022, you merged your company with Southern Impression Homes to better serve the build to rent niche. Can you break down what the build to rent niche is, the model for our audience that maybe haven't heard of it before, and kind of what your role in the process are, and what happens at the end? Who are the end? What's the exit strategy for that at the end of investors?
Yeah, so turnkey real estate, the term really became popular right at the end of '08. That's when, I mean, the bottom fell out of the real estate market. The best buying time ever in the last 100 years was basically beginning of 2009. And so when we were doing a lot of fixer uppers, that did well those first few years. But by about 2015, Charles, the deals weren't there anymore, right? There was a lot of people jumping into the market at this point, overbidding on fixer uppers. And my now building partner said, why don't we start to build our own properties instead of, just find old fixer uppers? And so we did that for a number of years. And then in 2022, all I was doing at first, it was a joint venture for years. And I said, we were basically working together all the time. I said, why don't I just merge my company, become a partner, and join forces? And that allowed me to focus on what I'm best at, the golden geese, like I just said, my relationships, sales training, and he handles all the operations and management. But it all evolved because turnkey real estate, right? Guys like us would find foreclosures, fix them up and rent them out. And sometimes we'd keep them. Other times investors would buy them off of us. And even the hedge funds were working in this. But what the hedge funds learned, these guys with bigger analyzing departments than us and more money, they found that getting old homes rehabbed wasn't that easy. And so they started to change their model right around the time we started to dabble in new construction. They're like, heck, we're just going to build new. So we don't have to deal with all of these older problems and surprises. And so we decided, a lot of our clients who bought old bulk foreclosures with us fixed up, they did well, but I'm sorry, with older houses, there's always more maintenance and repairs, more turnover. You're not necessarily in the better neighborhoods. With new construction, we've been able to do better by all standards for our clients, for growth, for longer tenancy, for less maintenance and repairs. And that's what the build to rent niche is about. It's kind of replaced the old model of getting turnkey real estate, a house that's been turned around and renovated from the 50s, more of a house that's built new today, has better warranties, normally built in a better area to a better standard. And that puts you on such a different trajectory. Yes, you're going to sacrifice some cash flow up front compared to what the performer will say in an old house. But now that we've run it against a few thousand old ones and a few thousand new ones, there's no comparison. The new construction is easier, more effective. And the best thing is, what I've found, Charles, is you don't have to own as many. I own 80% less properties than I used to, but I have more equity and more cash flow than I ever have. And so what does that tell you?
Yeah, it's one thing I've also found too with like a lot of those turnkey. When I've heard from people, I've never done one myself in the sense of buying a turnkey, but when I've heard it, it's like buying a house that's been flipped, and sometimes it's not 100% done correctly. You know what I mean? So it's something where they put something on here, but like maybe the bones haven't been changed of it, right? Where it needs to be. So they're just like, it's all cosmetic. and it leaves a new owner, this looks great, but I know behind the wall there's something that needs to be updated, or there's other problems that are kind of brewing. So that's something obviously you take completely out of the equation when you're building them yourself.
Yep, new construction, you can give longer warranties and everything's going to be new. 1955 house, if you're out of area and you don't know, how's the sewer main? Are the trussles under the roof? Did they do a new roof? The plumbing's for old galvanized from the day it was built. These things the newer investor doesn't know to ask. And again, we used to do new roof, new heating cooling, upgrade AC, kitchens, baths. We did it all. We were one of the rare ones. But again, that's one of the reasons why we got priced out of the market early, because we wouldn't cut corners and almost got forced into building new construction. That's one of the things that you have to look for on that. Are people doing full rehabs? They can be very lucrative, but also if you don't know what to look for, then like you said, something could look good, but you're not completely, in a good position.
Yeah, and then that's when you have a big, like the HVAC system comes up 2 years later and stuff like that, and kills your cash flow for years to come. You obviously are really well rounded in real estate investing. You've been all different asset classes within it. Why would you suggest to investors to consider build to rent versus, let's say, other real estate asset classes out there? I mean, what has been your experience? Obviously, you just explained to it from going from renovating a house that might have been foreclosed that's 50, 60 years old. But what about the other asset classes and maybe people that have been successful with build to rent with you, and why they kind of made that choice?
Yeah. So, and there are so many real estate niches. And so I encourage you to work in maybe one or two, because it can be pretty confusing if you try to go into too many, I think. Funds and syndications can be great until they're not. You want to do your homework on that. We've all seen that some funds and syndications haven't gone well. The nice thing about build to rent, like with our clients, is the tangibility and the ownership. They own it. They're not part of something. Like if a fund goes wrong and has to be unraveled, that can be a difficult situation. Now, with that said, I invest in funds and syndications, but you got to invest in the right ones. But owning your own property is one of the most basic and proven ways to make money, as long as it's in a good area, well managed, good condition, right? I mean, the history shows that. Like I told you, 8 out of 10 millionaires now have made their money that way. And so I believe that the reason build to rent is so lucrative is because it's staying under that commercial. And again, I have friends that made a lot of money in commercial. I've done some commercial, but the advantage that we have right now with turnkey new construction in our little realm is we have residential financing. The residential financing, we do our own in-house financing now. That right now we're locking our people in on single families, duplexes, and quads as low as 4.25%. Right now, if they went to their own bank, they'd probably get quoted 7%. And that makes the difference between cash flow today or negative cash flow. And so that residential realm has longer financing, better financing terms right now. And also, it's a little safer for a smaller investor to get into. And with that said, we've worked with some of the largest hedge funds in the world now that we've built whole neighborhoods or done packages of houses for. They're seeing that same thing too. For a long time, they're going, no, we don't want to deal with that. But really, the single family home, that smaller residential properties, have had some of the most steady growth in the good times and stability in the bad times, compared to other stuff that can go really off the boards that are, other niches. Again, I invest in these, but manufacturing, commercial, there can be office space right now. The simple residential always seems to have a need. And that's why we like it. And we also stick to workforce housing. We're not doing fancy houses, Charles. Our homes are very, basic, but nice, right around the median, price below the median. And we provide that more affordable rent and housing.
Yeah, that really keeps your vacancies very low. Do you have money sitting in the stock market and you're worried about it? Or worse, you have money sitting at the bank, not keeping up with inflation? My name is Charles Carillo, founder and managing partner of Harborside Partners. And since 2006, I've been investing my money and my family's money into income-producing properties. These are real assets, real properties with real addresses that produce real cash flow. At Harborside Partners, we provide passive investors who love real estate with a turnkey investing solution. If you want to put your money to work in real estate but can't find deals, don't have the time to get funding, and the last thing that productive people want to do is manage real estate. We find the deals, we fund the deals, and we manage the tenants, the termites, and the properties. Partner with us at investwithharborside.com. That's investwithharborside.com. Go to investwithharborside.com. If you love real estate, you like the idea of passive income, and believe that income producing properties will appreciate over time, go to investwithharborside.com. That's investwithharborside.com. One thing you mentioned about the financing, which I wasn't even thinking about, is obviously if someone's getting into this and they're possibly getting into this while also already having a full-time job, that makes the financing on a 1 to 4 unit rental property so much easier, and they can leverage that income versus if you go start going 5+ units, you're now in a commercial realm, and it's a whole different ball game. You know what I mean? So
Yes, very different. Yeah, and I tell people that's why I said before you quit your day job, you should be using your serviceability. And that's if I could go back, Charles, I had a good sales job and I'm quitting. I'm going into real estate full time. Well, that was the silliest thing ever. I could have qualified for a good 7 or 8 loans before I quit, but then afterwards I didn't. So for a lot of our clients, we have doctors, people that run their own businesses, lawyers, uh, guys doing well in technology. I say, stay where you're at, use your serviceability. We'll get you a good 5 to 10 properties that, can be a solid soldier of secondary income for you. And they don't have to go anywhere. And that's the power of serviceability. If you have a good job or a business that shows good income, you can qualify for that type of financing.
I was reading that you, I think it was a couple of years back, you did $182 million in sales in 1 year. Can you kind of go into a little bit about what your blueprint and strategy was to be able to take your build to rent business to that size?
Yeah, we started in one market, got it going well, and then we branched the same model into other markets. So there's no way, Charles, we could have stayed in just Jacksonville, Florida to do that. We had to branch in other markets. If we had stayed in Jacksonville, that would have pressured us to start building in areas that I don't like to invest. I like to be able to walk down the street at Friday, 8 o'clock at night without any concerns. And I can say that I do that at any of our properties. And so to be able to do that and find those fundamentals for the volume we wanted to do, we had to pick up and move our team into other markets. We're in 12 different markets in Florida now and going into Texas this year. And that was kind of the secret, getting it going in Jacksonville, Florida, where we had bought rehabs for many, many years, still building near these types of neighborhoods, perfected it there, or not perfected. We're always moving towards perfection, but got it going there well enough where we could pick it up and replicate it. That was kind of the secret. And again, we work with a lot of, successful partners, some of the largest podcasters in the world on whether it's financial success or real estate have been long-term sales partners with us. And their audience is looking for what we do. So it's a very good blend where we can help them, cut some of the learning curve off that I had and was very painful that they don't have to go through. And so that's been a big help to building such a pipeline of sales as well.
What are some of the common mistakes you say you probably have seen real estate investors make over the last 20, 25 years?
One of the biggest ones, Charles, that I've learned, and you alluded to it before, is this owning of a ton of properties. So when I first went into those first real estate courses, 100 house club, that's all everyone talked about. Once you own 100 houses, life, you are, sitting in the emperor's chair. That's it. Well, I hit double that. And I forgot to look at the quality, the performance. You're just mounting up houses in not good condition and not great areas that are very management intense with lots of turnovers, more maintenance than you could imagine, not getting the rents that you thought. And all that starts to add up. And so the biggest mistake is getting into that race of too many. And I always say now, own less of better quality. That's my biggest thing. If my high school friend comes to me, a relative, what would you do differently? I'd say get in, own less of better quality. You're going to perform in the good times. You're going to be safer in the bad times. You're going to have less headaches. So that's one of the biggest mistakes, going into really tough, not so great properties and thinking that that's going to get them better because they get wrapped up on this little bit of higher cash flow. That just doesn't normally play out. Another thing is too, when people get into real estate investing, I'm sure you saw this. One of my mentors used to say, everyone wants to build the Taj Mahal before they own a duplex. And people have even joked, oh, you've done thousands of these now. Why haven't you gone into the big hotels or huge apartment complexes? And I said, man, I'm just starting to get good at this. And so, that was something good mentors over me taught me, that, you want it to get where real estate investing becomes boring. right? It's just cranking out. If you want excitement, you know, climb a mountain, jump out of an airplane. Money making, especially in a real estate niche, should be boring, because once it's boring, you know what you're doing. You can see things before they happen. You're on the inside track. It's when people are always jumping from niche to niche to niche every 4 to 6 months, they never become an expert. They never leave the freshman class and get to the senior class where you have better privilege and better results. So those are some of the biggest mistakes I've seen.
Yeah, that's a lot of great advice. My dad started in like larger D-class properties back in the 80s and early 90s. And I remember being just a kid watching him. And he would always tell people when he'd like go to the contract, he's like, it's not the Taj Mahal. You have to always like tell every contractor that. And he went the other way. He started with those and went into like three families. They were very prevalent where we were from the Northeast. And he went to that because they're better neighborhoods, less management intensive. People stayed longer, multi-year leases. It was that you weren't negotiating every time collecting rent. These things that war stories, I guess you would say, that people in that type of lower class. So I totally understand what you're saying, and those are some examples that really
No,
resonated,
good.
which what I saw face. Yeah, but so over these years, as we're kind of getting a little bit more into kind of how this has changed your personal life too. I mean, how has your relationship with money changed over the years? You said how you changed it where better properties, less time intensive, more cash flow, less headaches. How else has money kind of changed just your relationship with it over the years?
You know, I was talking to a friend the other day who happens to be a therapist, and he works with a lot of very big entrepreneurs. And we both agreed of something. We're both poor kids just trying to be a little less poor. And so I guess I've gotten better at it. Um, one of the fears of when like I went through or my parents went broke in fifth grade, you don't forget stuff like that. And so I've really had to realign my relationship with money and not always be a fear of losing it, but more have a confidence in myself of it can come and it can go and I can make it back. The old, would you rather keep your money or your relationships and your skill set? Now that you have that, you can come back. So I think with me, it's less of a fear-based thing that I need to do it. And it's more an excitement. And that excitement for me, it allows me to do the things I want to do and support the causes I care about and be with the people I want. So I really am starting to see it more as a vehicle. And that's good. At the beginning, Charles, honestly, it was an insurmountable mountain. You know what I mean? I had such drive, but I think I was always scared. And now I'm starting to have more courage. But also, when I get more courage, which is weird, that might sound, oh, he's going in these crazy deals. I'm probably more conservative. So I don't know if that makes any sense, but those are some of the relationship things that have happened.
You and your wife wrote the Passive Income Playbook. Can you discuss its premise and also the 18 summers concept that you allude to?
Yeah, so we wrote a book about 10 years ago that we never expected to take off called The Family Board Meeting. It's now a Wall Street Journal #1 bestseller, which we're very proud of. And it's about helping entrepreneurs make sure they're successful at home, not just successful in their business. And it got an underground following. We never thought it would happen. We're very proud of it. But people would talk about, okay, you've developed this family life, which seems extraordinary, but how? How'd you fund it? And I said, well, it wasn't book sales. I can tell you that it's real estate and real estate investing. I said, well, can you talk about your journey? So that's what we shared in the Passive Income Playbook, our 25-year journey, into real estate. How everything we've talked about on here, how we started in fixer uppers in tougher neighborhoods and learned lessons, survived '08, found new niches, went into bulk foreclosures, found that not to work, and really hit our stride in wealth creation 10 years ago for not only ourselves but our clients, with build to rent, with new construction turnkeys. And so that's what it's about. And we also throw in a bit of family. There's so many people that they want that better family life. And again, when I say legendary family life, Charles, there's no ego in that. That just means all the things I couldn't do as a kid, I want to be able to do with my own family. And that's pretty much what it means to me. So we share some of the concepts and strategies I've learned from our family and other mentors, where we can not only build a great real estate business, but enjoy our family life along the way. That's what 18 Summers is about. The statistic that the average person will spend almost 85% of the quality time they ever have with their child by the end of the 18th summer. And so you want to make the time. You don't want to take that terrible advice I got when I first started. Put your head down for 10 years. get back to your family life. They'll understand. That's terrible advice. You got to smell the roses along the way with them. And that's what we talk about in the book. How do you build your real estate portfolio and this side of the business while also enjoying the journey with your family?
That's a lot of great information. I was looking over it, and was it a Wall Street Journal bestseller? Is that what it was?
The Family Board Meeting was a Wall Street Journal bestseller, and the Passive Income Playbook was Amazon and USA Today.
Oh, fantastic. So as we wrap up here, what are the main factors maybe contributing to your success over the years? What would you allude in maybe your personal and professional life?
I've gotten really honest about taking inventory. Okay, what am I good at? What am I not good at? What is making me the money? What is not making me the money? Should I be working with this person, or should I not be working with this person? Taking inventory is key. What am I really stinky at? What do I suck at? I can't be doing that anymore and pretending that I'm good at. And so I've tried to really get clear on my genius and where I can add the most value and try to delegate the rest. And that's been really important to me. And also sticking to a niche and simple plan. There's so many things, especially when you start getting into events out there, that, wow, this guy's doing this. And wow, that seems incredible. You can always fine tune a little, but you stick to your own plan. And the more I've done that and kept my recipe simple for the things I work in, the things I invest in, where I spend my time and who with, it seemed to move further and further in the right direction, Charles.
That's a lot of great information. So, Jim, how can our listeners learn more about you and your business?
Yeah, if you want to go to jjplaybook.com, that's a great starting spot. You can download the first 3 chapters of our best-selling book there, learn about our real estate journey, and also our build-to-rent business. If you want to see how it works, what we do, the principles that we follow, that's a great starting point to learn more about us.
Well, thank you so much for coming on today, Jim. We'll put all those links into the show notes, and I'm looking forward to connecting with you here in the near future.
Thanks for having me, Charles. Good being here.
Hi, guys. It's Charles from the Global Investors Podcast. I hope you enjoyed the show. If you're interested in getting involved with real estate, but you don't know where to begin, set up a free 30-minute strategy call with me at schedulecharles.com. That's schedulecharles.com. Thank you.
Nothing in this episode should be considered specific, personal, or professional advice. Any investment opportunities mentioned on this podcast are limited to accredited investors. Any investments will only be made with proper disclosure, subscription documentation, and are subject to all applicable laws. Please consult an appropriate tax, legal, real estate, financial, or business professional for individualized advice. Opinions of guests are their own. Information is not guaranteed. All investment strategies have the potential for profit or loss. The host is operating on behalf of Syndication Superstars, LLC exclusively.